right, we'll turn our focus for a bit towards markets, which seem like they are a bit nervous ahead of the budget and don't know what's coming. It could be that, it could be a mix of global factors. Global markets have also been weak, though, of course, today the US markets are on a zoom in a really good mood. As we can see, the Dow 500 points up now as I speak. 1.67% up. The Nasdaq also in the green with 136 points up. So exciting times in the US markets, but so far the last 5 days in the Indian markets have been tough. The Sensex has lost close to 6%. 5 lakh crore rupees of market cap of the Sensex has been wiped out. It's been an across the board selling and another 500 points down today. So what's going on? To speak on this, I'm joined now by Amisha Vora, Joint MD of Prabhudas Leeladhar, and Sunil Subramaniam, MD and CEO of Sundaram Mutual Funds. Ms. Vora, let me begin by getting your point of view on what you think is going on in the markets. Is this pre-budget jitters?
I think it's more to do with the global outlook and global changes rather than only the pre-budget jitters. And many a times it's levels which make a difference rather than any very specific development. But this time around, while Fed has continued to maintain their outlook constant, I think global hedge funds had some really big trouble due to the Main Street retail investors. And I think to some extent that forced them to sell their other good stuff. But beyond that plus some developments in China, I think created a bit of disturbance in the ongoing rally, which is, I think, very welcome. This correction is very welcome.
Sunil Subramaniam, would you say that the correction is welcome and overheated market has seen some cooling off and these are just merely profit bookings? Or is the sort of outflow of FIIs from the last 3 days worrying you?
So two things are there. A good bull market is always represented as one which takes a breather regularly. You take the Sensex charge, since its lifetime, take the Nifty charge, you'll find that a bull rally is one which always lets off steam and then gathers steam, because that's the nature of the ebb and flow of liquidity, right? So I think that this actually strengthens the concept that we are in a long-term bull rally, that there is this taking of profits, because people come with different time frames in their investment horizon. So suppose somebody from March last year had said, I'm taking a roughly 1 year horizon, and he looks at it and he says, okay, do I wait for 1 year to pay the long-term capital gains, or do I just book the profits? So that's one. So there are different tenors of players. So this is actually a indication of a healthy bull market, number one. Number two, if you look at it, the budget is one. The second is the recovery of the advanced countries is going to be a little bit faster than India in the shorter run. Though in the longer run, that may turn around. The reason being that enormous amount of liquidity that's been pumped in, part of it is going to gold, part of it maybe to bitcoins, part of it maybe to fixed income, that's why negative yields, but part of it is going to equities, and some of that now is going to real economy. So when the real economy recovers, right, this reallocation of capital, then always there is a little bit taking off from wherever it has gone up the highest, because you take your most highest profits and redeploy it. That's the second thing that India is facing. The third is, if the world economy revival happens, the commodity cycle revival will follow through. So when commodity cycle revives, no, it's actually not good for India. Why? Because we are a commodity importing country, whether it's oil or anything else. Whereas Brazil, Russia, South Africa, most of the other emerging markets which compete for capital are commodity exporters, commodity rich. Their market suffered in this period over the last year because commodity prices were going down. So now a little bit of a reallocation of capital between the commodity user like India and a commodity exporter like other emerging countries is also playing out here. And then I mentioned the budget in passing. So what is the budget going to do? The budget is going to allocate massive amounts to infrastructure, is what we believe. Now, when you look at it, those are the stocks which haven't done well. So if people want to redeploy, but they'll wait to see what exactly the budget does to say where to put, but it's better to sit on cash, then take that buying decision rather than go and sell in a post-budget and reallocate your portfolios. So I think a lot of all of this is at play. This is not a cause for undue worry. And if you look at it, if you look at the various indices, even within the large cap index, probably what 20, 25 stocks have accounted for this rally. So there's still another 75 stocks within the large cap space, the whole mid cap bucket, small cap bucket, all of which are probably inching near the January 18 highs of the market. So there is a lot of value there lying to be picked. And I think people are just reallocating, waiting on cash to make the right investment decisions in a post-budget scenario. So I think all of these factors are at play. So I wouldn't have any undue cause for concern. I think it's a good sign of a healthy bull market.
Okay, so but it also raises the question about whether it's in tandem with what we're seeing with corporate profits. Let me take this to Amisha Vora. Corporate profits, the numbers have been good, results have been good, outlooks have been positive, and yet we are seeing this kind of nervousness. Would you agree that it is simply investors shoring up cash for the budget, sort of armoring up before the big day? Do you think that that's the perspective coming through?
So 2 point of view here. I think that this quarter numbers have beaten all analyst expectations, more or less across the sectors, and both in terms of top line as well as in terms of margin. So numbers have been pretty good. I think the commentary with the results have been also very good generally, but not to forget the fact that the other point which you were mentioning about why this profit booking, while the corporate outlook as well as economy outlook is reasonably good. And I would say that we should remember all throughout this, you would say from April to January of the markets, when markets were doing very well, month after month, domestic institutions were sellers. And that outlook has not changed as yet when markets are doing so well. So to say that they are booking short-term profits or getting ready for a reallocation is probably not the fact. But November, December, and even in October, we saw a huge amount of FI inflows coming in. And markets are at a level that to even maintain the level, you need continuous inflow of some fresh money. The moment you see even slightest, outflow for any global reason, you tend to find some small correction setting in. And I think that is what we are going through. I am extremely bullish, not only for 1 year, frankly, from economic perspective, I think I'm very bullish for next 3 to 5 years in India. And because we are sitting on a very good base, a very, very, solid base, both of reforms and liquidity, which can give very good outlook for economy for next 3 to 5 years. So that is not a concern as far as I read the economy.
Long-term perspective is positive, all eyes on the budget, but such exciting things are happening with investors worldwide, and I must get a comment on what's happening with GameStop. Sunil Subramaniam, everyone is looking at this story fascinated, where the street retail traders are taking on hedge funds by shorting these companies which no one thinks are going anywhere. What do you make of this phenomenon?
I think that, I would say that there is this term called Robinhood investors, which has been coined in. And these investors in the last 1 year have had a very good thing, whether it's in India or it's outside. So I think all of this is that there's a lot of information out, and in a time when there's a momentum-based, liquidity-driven rally, right, almost everybody goes there and makes money. And so the shorting opportunities rise, right? So it's, I think, again, to me, it's like, go back to the old days of Badla, right? This kind of liquidity into the market where you have both kinds of players. There's the shorters and the buyers are the true ones of a healthy market. And we need both types of views to play out. Sometimes these people win, sometimes these people win. But I think that then helps long-term players like mutual funds to invest even in a slightly lesser liquidity, because there are these players providing liquidity in the market. So while such investors, Robinhood, are treated as bad guys by a lot of people, I think they are an integral part of the capital markets. They play a very healthy role of providing liquidity, and I think they're essential for our country to tap the potential of the capital markets for economic growth. So I think that's I would actually say that it's a very, very welcome and healthy move. What these are all happening.
Yeah, everyone loves the underdog. So that's why the story gets exciting as well. But thank you so much, Amisha Vora and Sunil, for joining us while we take a look at what's happening with the markets. You know which channel to tune into for all your news on the markets. We track it for you all through the day and especially in the run up to the budget.